Thank you for joining me from across the globe. Train your mindset and trade like Warren Buffett. It's a webinar that's being created by myself and ADS Prime. It is an educational webinar that's essentially designed to give any type of an audience a much clearer understanding on potential investments and how to train yourself to achieve those potential investments in the trading market. So how I normally start is of course I always start with the content page, just to overview exactly what we're going to be doing and what we'll be covering, and essentially what the learning outcome should be today. So I always start with an introduction. The introduction is either on myself or the company that I'll be representing. In this case, ADS Prime. So the topics that we're actually going to be covering today are gambler's mentality. Is time really on your side when you're trading? We're going to look at one specific image just to identify that. And we're going to move on to, fear and greed, how it actually consumes a person's soul, and how that can be a real downturn towards potentially hitting those profit margins that you want to achieve, just because your psychology is off. Now, we're going to conclude with Warren's actual mindset to his avenue to his success. Now, once we've covered all the topics today, what I want all of you to have the opportunity to do is to be able to open up your trading accounts, whether it's a live account or demo account, and I want you to be able to essentially trade using real capital if you can, which is always the best way to train your psychology, because then you're using physical capital rather than virtual money. And test yourselves and really see how whatever I'm going to teach you today can then be embedded into your own trading strategies. Okay, so look, we're going to then conclude with the overall conclusion, and if you do have any questions, ladies and gentlemen, by all means, of course, ask the question, but please do hold it to the end of the webinar. Thank you. So, an introduction. Well, an introduction on who is ADS Prime. Well, ADS Prime is ADS Securities London, who is an FSA regulated business and brokerage. They're a London-based brokerage with sister companies across the globe, predominantly in the UAE. They're an ECN. They also provide a number of multi-market, sophisticated Forex precious metals, CFDs, and of course spread trading for both private and institutional clients. So, they've got institutional grade of liquidity, very, very fast pricing in terms of ultra fast pricing. They have no maximum trade size. Their leverages are up to 500, 1 to 500. They're actually lead in execution, so they have 100% automation of trades. They've got competitive spreads, and of course 150 million average executions, which fill 99.9% fill ratio. Okay, now they're client focused. They really have a strong essence towards personal account managing, advanced charting and analytics. They've got auto chartist and algo builder. They also have the ability for you to trade on any type of device, such as ISO or Android, or being able to be more portable with the means to be able to make money. So that's a little bit about ADS Prime. Now, what I'd like to do is, since we have a lot to cover today, is start with gambler's mentality. So, ladies and gentlemen, the financial markets actually attracts all sorts of participants, okay? And some of them are part-time hobbyists. They're looking for an extra form of income or cash to essentially, create multinational institutions that are moving billions of dollars, across thousands of instruments. Now, the trading game actually stretches across both ends of the spectrum, with one part timers are actually at home, gamers competing for profits with traditional funds and lightning fast computers in terms of algorithms. So data actually suggests that there's a majority of traders who are actually playing at the shallow end of the market pool, which would eventually fail and endeavor and pick up stakes. Now, letting someone else actually manage their money or simply giving up and looking for another way to really build your wealth, ironically, many of these folks have never actually had the chance to succeed. And that's primarily because they actually come into the game of a casino mentality that is actually marked with a direct path to failure. Really not knowing or having a clue on how to trade and what you essentially need to do prior to actually placing any sort of position. Understanding your market, understanding what you're about to start doing, rather than having to bet on the market going up and hey, I've won, rather than being able to formulate a correct strategy, identify your points, have the right psychology, and execute on those on that basis. Okay. So what exactly? The question is, what is the casino mentality, and how does it actually undermine the trader's quest for profitability? Well, it's actually a flawed approach with limited to various different novices who who have experience or do not necessarily have the experience as a trader, or also to have experienced traders also to get caught up in this type of behavior. So I'm not just saying that you as an individual that is a novice that's just starting to trade has no real idea on what the trading market is about and how to effectively do it to create some profits for yourself. This also happens to experienced traders who also, as I said, get caught up in this type of mentality, this type of behavior in terms of the casino mentality. It's a bet rather than having a form of strategy that once you execute and you actually hit on point in terms of your target marks, then what would make you feel better as an individual, knowing that you'd actually achieved something by pinpointing where the markets are going, or knowing that you've actually just guessed it and it's just happened? How many of those actually turn out to be positive for you? That's the question you have to ask yourself. So look, defining the casino mentality, what you have to see is that you have a number of new traders that view their participation in the financial markets in the same way as a trip to Las Vegas, for example, really hoping for a pile of cash to land in their pockets and that can then be traded for a bigger pile of leaves, if you want to call it that. Now, what you have to see is that you have a lot of these traders and different types of people that haven't really learned the basics of trading strategies, okay, and the techniques, and that's because it's obvious to the nature of risk, okay, and hypnotized by the aspect of greed that really sticks like glue to all the the get rich quick schemes. So look, media and peers have actually programmed new traders to really look at securities as a betting sheet, and the broad market as a sporting event. Now, in which anyone can actually win, and as long as they actually root for the right side, then they're on the winning side. So look, the game looks black and white from their perspective, but because they don't really understand how to essentially market pick the right pocket of traders who actually throw money at securities with the same sort of intensity that coins and drops into a form of a one-armed bandit in the hopes of hitting the jackpot, as I said. Now, just like a slot machine, you've got minor payouts, a regular interval of increases, and motivation to be able to place bigger bets whether or not they actually are appropriate to the market conditions, and of course the opportunities in the play in which it plays out in a matter of time. So really, greedy behavior occasionally actually pays off with a big win. But look, mostly losses of money actually consistently comes over time, and that's opening the door to failure with a final exit from the trading game. Okay, now we're not in this to essentially put our savings or put some money that we've put aside to lose it. We're here to actually learn how to actually make some money on that. So what I'm trying to identify and emphasize to you is it is not a gambler's game. It is not the right sort of mentality to have. You need to have the right psychology behind you that's, you know, definable. It seals your fate in terms of not being a gambler. But, you know, just like a gambler who actually pays for the excitement but fails to learn the odds for each game and the appropriate response, that, you know, essentially would then reduce or eliminate the houses that create advantages. So meanwhile, whilst you have both sets of individuals that get secondary reinforcements for more destruction and action, and that's because their bodies actually release, you know, the adrenaline and the endorphins whenever they actually play, regardless of winning or losing. So with that, you know, you can see that whether you're making money or you're losing money, if you've had that train of thought where you just come in, you don't really care, okay, and you know, you're just gonna pick one instrument and buy or sell in that position without looking at any of the technical analysis, without realizing that there's any fundamentals, and you just, you know, you've hit the button for a wish luck of profits to be able to come into your account. Now, as I said, that can happen, but it doesn't always happen. But then if you get used to this sort of mentality and psychology, then you're going to have the endorphins and adrenaline that goes with each winning and losing. So you tend to become accustomed to it, and, you know, it's hard to change that sort of psychology if you embed that into yourself. So you have to be very careful from the beginning. You've got to be able to have the right train of thought before you jump into the game, okay? And look, you know, one of the biggest flaws for beginners or lifetime affiliation is that, you know, the casino mentality primarily affects novice, and that's because of, you know, natural consequences, misunderstanding of financial markets, and how they actually function. Now, you have many different types of traders who will actually learn from their mistakes sooner than later, okay? And, you know, using the investable losses as, you know, they wake up call to, you know, to the actual subject matter of, you know, being more serious in terms of how you then take the role as a trader and, you know, how you strategize to make yourself more effective in the long run. Now, in turn, okay, this actually provides the motivation that's needed to really sit down and really learn the basis and the basics of strategy, positioning size, positive expectancy, and of course being able to risk manage, most importantly. Now, a lot of these novice traders actually wash out quite quickly, and that's because they tend to abandon the casino. Well, they don't tend to abandon the casino mentality, but, you know, experienced traders can actually carry the elements of destructive mindset for years without doing anything about it. While it doesn't really dominate their time-tested strategies, this mentality can actually show up whenever greed actually overcomes the discipline in your own psychological mindset. So what's actually important is that it isn't a fatal in small doses, but it may inject a bit more of a bigger amount of dose on your trading day, which could turn out to be the wrong outcome in terms of what you wanted to achieve. Now, there are appropriately called the lottery sticks, as they say, working best with, you know, traders that face binary scenarios. They've seen enough times to actually believe that they have a better than 50-50 chance of being right. Now, what you have to look at is, for an example, there's Russell investments, reimbalances, there popular index portfolios once a year in I believe June, and really triggering rallies because the fund managers actually need to buy the new securities, and you've got experienced traders that can actually book windfall profits if they guess the additions in advance. So although binary events in terms of a security that is added or is not, years of observing this process can actually create a small edge that traders can then play with a basket, of various different types of stocks or instruments that they think they will then, get to add and be able to trade on. Now, really, the key is to overcoming the casino mentality, and education offers exactly that, the most potent defense against the casino mentality. And to really start your trading career by reading solid materials, ebooks, attending webinars such as this one that are all based around investing, trading, and of course the history of the financial markets. Most importantly, that is how technical analysis is then created. So you've got the raw exposure to be able to explore specialized materials in your area of interest, including security analysis by various different individuals like David Dodds, Benjamin Graham, that primarily focused on fundamental analysis. You've got other books that have been written by that are technical analysis of stock trends that are done by Robert G. Edward and John Magee. There's so many different books out there for you to learn from. That's how I essentially started. I went out and I sourced the right sort of content, the right sort of material to give me that market edge on being on top of my game when I pick my instruments, whether it's stocks, whether it's Forex, whether it's CFDs or futures. I am more in tune and was more in tune than I first sat on a computer to actually trade. So the key is really education, okay? And the next topic is, is time actually on your side? And this is a key question that a number of traders ask, novice traders do ask this quite often. And, trading always actually comes down to the time, okay? So the true, when you truly appreciate this, what, simply needs to be noted that one of the biggest gains in the stock market history actually occurred in October, and that was in 1987. I believe it was the 19th of October as well. So during that day, it was actually one of the biggest, greatest crashes in history. Okay, and that day the stocks actually had declined amid harrowing around 23% under by the end of the day, the EOD, and actually around 1:30 p.m. They actually staged a massive rally that saw the Dow Jones and the S&P index verticalize virtually to the bottom, okay, rising more than 10% before actually running out of steam and then turning down to the end of the day, at the end of the lows. All right. Now, whilst most traders that lost money on that day, those who actually brought that bottom at 1:30 and then sold the position an hour later were actually rewarded with some of the best short-term gains in the stock market history. So conversely, you have traders that, unfortunate enough to have actually shorted at that 1:30 p.m. mark, only to cover in panic an hour later, held by the dubious dysfunction of losing money on their short positions during the day of that stock market in terms of the greatest decline of history. So it's nothing else than the stock market's crash of the 1987 that actually proved that trading is all about the time. So timing is actually key. It's hard to really master that. But what you can still capture is significant gains on an ill-timed trade. And if you actually follow the simple few rules, then you probably achieve greater success. So the advantage of avoiding margin, and what actually happens to traders who are actually terrible at timing, okay, can actually the question is that can traders actually who are poor timers even succeed, especially in the currency market where you have ultra high leverage and you have a stock driven price action that often forces margin calls, okay? And the answer to that is simple, it's yes. Now, some of the world's best traders include, Jim Rogers, are actually still able to succeed. And Rogers, in his famous short trades in gold, is well worth the examination and examining in more detail. Now, in 1990, when gold actually spiked to its record highs on the back of the double-digit inflation and the geopolitical unrest. Now, Rogers actually became convinced that the market for the yellow metal was becoming manic, and it had so much traction towards it that he knew that all the probability markets, the rise in the gold could actually not continue indefinitely. Okay, but unfortunately, as it was so often the case with Rogers, he was early to trade. He shorted the gold position at around $675 an ounce, and while the precious metal actually continued to rise all the way through to the 800 mark, most traders would not have actually been able to withstand such an adverse price movement in their position. But Rogers, on the other hand, an astute student of the markets, of course, knew that the history was really on his side, and managed not to only to hold on to his position, but to also take profits, and eventually becoming the short near $400 to an ounce. So you're talking about